Crypto lender Celsius halts withdrawals due to extreme market conditions. The cryptocurrency lending platform Celsius Network has halted withdrawals because of extreme market conditions as the value of the digital asset market slipped below $1 trillion, £820 billion. Bitcoin dropped to a 17-month low of $23,880 after the Celsius announcement, while Ether, the world's second-largest cryptocurrency after Bitcoin, dropped more than 15% to $1,250, its lowest since January 2021. Meanwhile, Binance, the cryptocurrency exchange, announced on Monday that it had temporarily paused Bitcoin withdrawals owing to its stuck on-chain transaction. Hi guys, crypto investing here. First, let's find out what is Celsius Crypto, but before we start, please like this video and subscribe to my channel. Okay, let's begin. What is Celsius Crypto? Celsius Network is a regulated, SEC-compliant, lending platform that enables users to receive interest on deposited cryptocurrencies or take out crypto-collateralized loans. Celsius hopes to attract users by returning high yields on their deposits while maintaining the benefits apparent in traditional outlets such as quick, fee-less transactions. For existing crypto investors wishing to take out a loan, Celsius provides an opportunity to receive dollars without cashing out of cryptocurrency holdings. The system is based around their native token CL, which is used to take loans, provide rewards, and make payments. Further, Celsius implements a loyalty program where status is reflective of CEL's value in the user's portfolio. As a member progresses to each subsequent tier, they are given bonus rewards and discounts on loan interest. What does Celsius do with crypto? For existing crypto investors wishing to take out a loan, Celsius provides an opportunity to receive dollars without cashing out of cryptocurrency holdings. The system is based around their native token CL, which is used to take loans, provide rewards, and make payments. Is Celsius legit for crypto? Celsius Network is an excellent platform for beginners who don't want to face any risk while trading crypto. For passive investors looking for some safety tool, Celsius Network is the best. Then what happened? Bitcoin tumbled on Monday after major U.S. cryptocurrency lending company Celsius Network froze withdrawals and transfers citing extreme conditions, in the latest sign of how financial market turbulence is causing distress in the cryptosphere. The Celsius move triggered a slide across cryptocurrencies, with their value dropping below $1 trillion on Monday for the first time since January last year, dragged down by 11% fall in the largest token Bitcoin. After Celsius's announcement, Bitcoin touched an 18-month low of $23,476. Number 2 token Ether dropped as much as 16% to $1,177, its lowest since January 2021. The total value of the cryptocurrency market fell below $1 trillion on Monday after the sell-off, according to the data site CoinMarketCap, which had valued the market at almost $3 trillion in November. Celsius said in a blog post it was pausing all withdrawals and transfers between accounts for its 1.7 million customers. The company offers customers high interest rates, as much as 18%, on their cryptocurrency deposits and pays the interest in crypto assets, which includes its own token, called CL. Due to extreme market conditions, today we are announcing that Celsius is pausing all withdrawals, swap, and transfers between accounts, the platform said. We are taking this action today to put Celsius in a better position to honor, over time, its withdrawal obligations. On June 7, Celsius published a blog seeking to reassure customers. Amid volatile conditions in the cryptocurrency markets, triggered initially by a collapse in the crypto project Terra. Headline: Damn the torpedoes, full speed ahead, the blog said the company had not had any issues meeting withdrawal requests. Celsius has offices in London, New York, and Lithuania. Celsius's website tells customers they can borrow like a billionaire. It has $11.8 billion in assets, down from more than $24 billion in December last year. In November, it said it had raised $750 million from investors including Caisse de dépôt et placement du Québec, one of Canada's largest pension funds. Like a bank, Celsius also has a retail loan operation, with customers able to borrow money, denominated in US dollars, from the service. Because of the impossibility of sending debt collectors after a crypto wallet, however, Celsius loans are over-collateralized. Customers need to deposit Bitcoin or Ethereum worth at least twice the value of the money they are borrowing. That can be useful if, for instance, a Bitcoin millionaire needs some hard cash to buy a house but does not want to liquidate their Bitcoin holdings because they are gambling the coin will go up again. However, unlike a bank, Celsius's loans charge a lower interest rate than it pays on deposits. The company makes up the difference through an opaque investment strategy that has in the past included investing $300 million in Bitcoin mining, offering more traditional loans to unnamed institutional investors at higher rates of interest, and taking large stakes in other cryptocurrency projects. Occasionally, that strategy has resulted in large losses. A hack of the decentralized investment platform BadgerDAO that wiped out that project was revealed to have cost Celsius $50 million in Bitcoin. The company also had a close relationship with the defunct stablecoin project Terra, at one point investing $500 million of funds in the Anchor protocol, Terra's own saving and lending service. Celsius also offers customers higher returns if they accept their interest payments in the project's own crypto token, CL, which was trading at $7 last year and has fallen to less than 20 cents. Cryptocurrencies have also been swept up in a market panic over rising interest rates, which has dulled the appetite for higher-risk assets. The surge of interest in crypto lending led to concerns from regulators, especially in the United States, who are worried about investor protections and systemic risks from unregulated lending products. Celsius and crypto firms that offer services similar to banks are in a gray area of regulations, said Matthew Nyman at CMS Law Firm. They're not subject to any clear regulation that requires disclosure over their assets. Celsius CEO Alex Mashinsky and Celsius did not immediately respond to Reuters' requests for comment outside U.S. business hours. Celsius raised $750 million in funding late in November from investors, including Canada's second-largest pension fund Caisse de dépôt et placement du Québec. Celsius was valued at the time at $3.25 billion. As of May 17, Celsius had $11.8 billion in assets, its website said, down by more than half from October, and had processed a total of $8.2 billion worth of loans. Mashinsky, the CEO, was quoted in October last year saying Celsius had more than $25 billion in assets. The company's website, which urges customers to earn high, borrow low, said it offers interest rates of up to 18.6%. While crypto lending has become increasingly big business, the sector has come under regulatory scrutiny, particularly in the U.S. Crypto markets have been under pressure in recent months, falling alongside other so-called risk assets as interest rates have risen around the world. Price falls have also both been caused by and contributed to the collapse of some crypto projects. Most notable was the fall of stablecoin Terra USD, which last month broke its dollar peg and collapsed in value, rocking the crypto industry. That's it for today's video. Please like and share and subscribe to my channel.